So when I analyze a rental property, I will look at basically the rental as a determinant of the price, and then take away the service charge as one of the main service charge and agent's fees. And you have to take all that into account to get your net rental yield. In London, it's difficult to get a net rental yield above 3.
To analyse rental property, you look at the rent, first of all. So you look at what the weekly rental income is, multiply that by 52 to get an annual base, or annual income rather, and then divide that by the asking price, multiply by 100. If you get a yield of around anything between 2 and 3%, then you're probably about right. That's the sort of figure that people are looking for.
So we analyse rental property on a rental cover basis. So we advise our clients to take a 60% mortgage, and we look on that basis to have a rental cover of 1 point something, as much as we can, 1.2 as a minimum, so that there is sufficient money to pay the mortgage, pay the interest-only mortgage, and have surplus cash for incidentals, repairs, etc. Because in prime central London, we're really looking at capital appreciation, not yield. So for yield, we're just looking at covering our costs and incidentals on an annual basis.
Well, analysing a rental property is the same as the sales. What condition is it in? Which way does it face? Light is very important, furnished or unfurnished.
The best way to analyse a rental investment is to look at yields. In London, a yield is typically around between 2 and 3%. If you go outside of London, you'll be looking at more like 7 to 10% yields. However, you should also look at whether this is an asset that you think will go up in value long term.
I look exactly the position of the property, the proximity to transport, if it's light, what floor it's on, just its best aspects, and then from that I derive a price.
I don't find myself analysing rental property very difficult. I guess the key things are that the location has to be excellent. You need to, in my view, like a property yourself if you're buying it. I think that's a critical point. And I would also look always at the rental yield and how much that's bringing in for you. I think the key thing when buying rental property these days is not to buy it in your own private name because of the tax circumstances. Much better to buy it in a corporate name.
The best way to analyse a rental property is through yields. But not only yields, you also need to take into account potential capital appreciation. So if you take potential capital appreciation along with the yield, you're in safe hands.
How would I analyze buying a rental property at the moment? Well, it's very difficult because the interest rates are playing against you. So nobody will really, it doesn't make financial sense to buy a property.